before, we will get the Vt equal to integral of 0 to t y yt e rank minus rho t and dt. So from the integration of equation 11, we rearrange thermofields and become the equation in number 12, which is rho equal to y divided by v and yt equal to g for lt. So from the equation number 10 and number 11, the supply price of capital is divided as the rate of which the shareholder are willing to supply the firm with financial resources. Equilibrium in the equity market is got at the market. Market is achieved when the market value of equities representing the quantity of the capital demanded equal to the held at the equals the quantity held at the previous rate of return. Yeah, so the next one is cost of capital can be divided by Ct equal to integral 0 to t ye e rank minus r rt and dt, where y is the firm expected earning from capital goods and r is the expected rate of profit. Again, integrating from the equation number 13, r as term yields, we get the equation number 14, which is r equal to ye divided by c and yet equal to ye for lt, which can be defined as the firm marginal efficiency of capital relative to its replacement cost, assuming that the firm maximizes the shareholder wealth. Otherwise, they will not hold the firm's equities. The firm can arrive at decision rule regarding its investment plan by comparing equation number 12 and number 14 when the expectation of the shareholder and the partners equal, then y equal to ye. So using the equation in number 15 and dividing equation number 14 by and by equation number 12, we will get r divided by rho and equal to v divided by c equal to q. If you excite unity, the value of capital investment will excess its cost, and the and the firm will have an incentive to invest. To calculate Q, we need to know V and C. So there is a simple method calculated given by Gordon and Gold, according to which V equal to minus B Y divided by rho minus BR, where the V is the present value of the firm's stock of capital, since we are assuming that there are no debt instrument and the firm is equity finance only. The B is the expected value of the firm's retention rate expressed. YE is expected value of the firm accounting earnings in the coming year. Rho is shareholder required rate of return on or the yield at which stock is selling, and R is firm expected rate of return on investment. So when investment is not only financed by retention but also by share of stock financing, then there from the equation number 17 become V equal to 1 minus D Y and divided by R minus 0, where D is D plus S and S is expected rate of stock financing expressed as a ratio of the firm's expected earnings. From equation before in number 12 and number 15, we will have C equal to Y divided by R, and substitution from equation number 19 and 16, we will get R equal to QY divided by V. So for the last one, we finally did the substitution of equation number 20 and 18. We will get rho equal to J divided by V, 1 minus D plus DQ, which relates the cost of equity capital to Dobbins Q. So I just, and the last one in the equation number 21 is the final result, which we will using to calculate the cost of equity capital from Dobbins Q. So if a firm already established the required inputs to the equation number 21, we can obtain from the balance sheet of the firm. But if a firm is newly established, there's no history of its own, it can be based on the data from the industry to which the firms belong. Q can be calculated as a ratio of V replacement cost. We know that V is the market value of the firm equal to shareholder equity expected at the year-end market price of stock. So there's a numerical example from the equation. Given V equal $10 million, C equal $5 million, Y equal to 0.70 million, B is 0.35, S 0.38, and D equal to 0.64, and the Q from the firm is 2. We'll calculate it and we will get 11.55%. If okay, therefore, if the capital cost of failure for the firm is 11.55%, we can be compared with the rate of return to the investment project. This desirability of an investment project is held to change in key ratio, where return share price reflect expectation future earnings from the fund. Okay, so that's all from our group. Kurang lebihnya mohon maaf. If there are any question, we would like to answer. Thank you, ma'am.
Okay. Thank you, Danang and the group, Rizkia dan teman-teman. Okay. Because it's 9 o'clock already, so let's move on to the second group. Yeah.
Okay, thank you, ma'am.
Yeah, sama-sama. Kelompok kedua tadi siapa yang saya panggil? Hello?
My group, ma'am.
Yes? Okay. Right.
Okay, Assalamualaikum warahmatullahi wabarakatuh. Good morning, I'm Karina and friends. So, in this opportunity, our group will present about Islamic cost of capital, profit measurement, and investment decision from authentic sources. This paper is written by Islamic bin Abdurrahman and Arif Saleh bin Rasman.
Okay, Demi, is it possible for you to turn your camera on or not?
Wait a minute, ma'am.
Okay, sure.
Okay, so this is the group member. The group consists of Asri, Demi, Erlangga, Muhammad Iqbal, and Muhammad Rizki.
Okay, thank you, Demi, for the introduction. And before I start my presentation, I want to say sorry, ma'am and class. I couldn't open my cameras on because there is some technical problem with my cameras. And now I'll start the presentation. So this paper is using several hadiths as the theory to give an alternative for Islamic finance and to remove riba from the cost of capital, which we know from the conventional that using interest rate, and by using profit or expected profit rate as the alternative of the interest rate. So first of all, the cost of capital by the definition is the cost of finance that needed to acquire the physical capital. And in the absence of an Islamic rate of return, Islamic financial institution use the interest rate mechanism or LIBOR as a benchmark for procurement and placement of funds. So what is the use of the LIBOR? That's two of use. First of all, that's an Islamic finance institution use LIBOR as their benchmark of profit rate. And the second one, Islamic banks still needs to tell the expected ROR first to attract deposit on investment, even though the bank will know the profit rate later. Next.
So on using the pricing benchmark, there are some controversies among Islamic scholars. It is because Islamic scholar haven't figured out what is the best replacement of the conventional pricing benchmark like LIBOR. So the pro scholar said that if all the pillars of sale is valid from Sharia point of view, just mere use of the interest rate as a benchmark cannot invalidate the wholesale. Taqi Usmani means that the example of LIBOR is only just a number, so it won't invalidate the sale transaction if the akad is already obey the Sharia law. And the other said benchmark is no more than a number and therefore non-objectionable from a Sharia perspective. LIBOR as a mere benchmark has nothing to do with actual transaction, or more specifically with the equation of fee or return. And the contra is taking hadith from Al-Bukhari, from Ibnu Abbas, said the Prophet came to Medina and saw the Jews fasting on the day of Ashura. He said, "What is this?" They said, "This is a good day. This is the day when Allah saved the children of Israel from their enemy, and Musa fasted on this day." He, the Prophet Muhammad, said, "We are closer to Musa than you." The meaning of this hadith is that we shouldn't follow kafir or infidels to whatever they do. So in this context, we Islamic benchmark because LIBOR is made by non-Muslims or those kafir, and we shouldn't follow them. Next.
And so what is the alternative of interest rate? So Prophet will replace interest rate on Islamic pricing benchmark. It is allowed by Sharia to make profit from sales or investment. So from sales, like a murabah, profit is determined on the beginning of akad. And from investments, like a murabah or musyarakah, profit could vary, but the expected return also should be determined by the beginning of akad. So the profit loss sharing percentage should and will be fair. Next.
Okay, now after we know that the profit is permissible for sale and how much it is permissible. So there are arguments on this issue. Okay, the first argument said that there is no limitation, but the other argument said that it is permissible for 1/3 of the price. For the one who said no limitation, this is narrated by Al-Bukhari and others, that the Prophet, peace be upon him, gave Urwah 1 dinar to purchase a goat. Urwah then bought 2 goats with that 1 dinar. Afterward, he sold one of the goat for 1 dinar. He come back to the Prophet with a goat and 1 dinar. And the Prophet, peace be upon him, then prayed that he be blessing in his trade. So in this context, actually, the Prophet is allowed Urwah to get 100% of the 1 dinar to, and then he get back 1 dinar also. And the argument of 1/3 of the price, Sheikh Wahbah Al-Zuhaili have suggested that the net profit margin should be fixed by the authority in order to observe justice in the market and to get blessing. They suggested that the profit rate shouldn't exceed 1/3 based on the hadith al-tulut kathir, which means 1/3 is a lot. In which comment made by Prophet, peace be upon him, when Sa'ad ibn Abi Waqqas wanted to make a big quest. So here the key is 1/3 is a lot. and that's why 1/3 of the price is permissible. Okay, and so I think this is the end of our presentation. Next. Yes, okay. Thank you.
Sorry. So, I think I will make a conclusion from the presentation. The conclusion is there is no argument that limits the taking of profits from a business activity. Justice becomes the basis for sharing profits. However, some previous scholars suggest that the margin is 1/3 the price, and taking excess profit is not recommended. So, this is the final of our presentation. Thank you for your attention. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Okay, thank you. Let's now move on to the third group. Kelompoknya Febrina ya?
Yes, ma'am. I will share
Okay.
screen, ma'am.
Okay, silakan.
Is it already seen, ma'am?
Yes.
Okay, Assalamualaikum warahmatullahi wabarakatuh. Today our group will present about, I'm sorry, I have not, yeah. Our group will present about Islamic pricing benchmark journal. It's the third journal. So here are our group members. There's Amira, Febrina, Nabila, Nadila, and Risha. Okay, the presentation will start. Will start by Nadila.
Okay. Good morning, Ma'am Karina and friends. Today, me Nadila and my four friends will be present our literature review about Islamic pricing benchmark. Before we start, I'm so sorry I can't turn on the camera due to unstable connection here. Next, first, what is Islamic pricing benchmark project? In this era, Islamic finance and banking had become an alternative investment method in the global market. The current growth rates shows that the prospects for Islamic finance are very broad. In the current global economic and financial crisis, supporters use the Islamic financial system as a solution. And Islamic finance has used conventional financial benchmarks such as BLR, K-Libor, COFI, and LIBOR to determine its own capital cost and the rate of return on its financial investment. Islamic banking is the leading institution in the Islamic financial industry, and it also acts as a follower, custodian, partner, and entrepreneur and guarantor. Therefore, the Islamic Finance Corporation proposed another Islamic pricing benchmark or IPB to determine its cost of capital. This will make it more comprehensive and independent of traditional benchmark that rely on interest rates, which is abhorrent to Islamic finance. Malaysia, with an equity market that is 86% Sharia compliant, world's largest issuer of Islamic bonds, and 134 Islamic unit trust funds, and also an eyeing to become the international Islamic financial hub by year 2010, is taking the lead. In the International Sharia Research Academy for Islamic Finance, or ISRA, has assigned a team of researchers from Institute of Islamic Banking and Finance, International Islamic University Malaysia, to undertake this project and taking the lead in formulating an Islamic pricing benchmark model for the Islamic finance industry. Next, and the second section, what is Sharia perspective on Islamic pricing benchmark? Is trading legal in Islam? As it is narrated by At-Tabrani from Al-Kitab Arabi, this hadith shows that the Prophet ﷺ encouraged the trustee of the orphan properties to invest in trading so that the property will not decrease by the zakat payment or other expenditures. And from Anisa verse 5, this verse explained the obligation to
I'm losing your
invest the
voice.
properties of orphan children using the sorry.
There was a moment there where I lost your voice, but now it's back.
Oh yes, sorry, ma'am. It means utilizing their properties to be raised through
It's gone again, your voice.
trading activities or by invest distributed. Hello.
Yes, now it's back. Sometimes it's gone, like for a few seconds, like.
Okay, ma'am. Sorry. Can you hear my voice again?
Now it's clear.
Okay. The next. Should there be any limit to profits? There are no limits to profits or profit rates in Islamic views, but the Quranic verse has discouraged trading without profits, as Allah said in Al-Baqarah verse 16. Islamic is based on the principle of justice in distribution of profits, not strictly limit the rate of profits acquired according to the factors of commodity, place, and period. Next. Juristic disagreement over fixing price. Due to the construction of Islamic pricing benchmark, which is influenced by OPR, any change to OPR will lead to a change in Islamic benchmark rate. Having benchmark for pricing implicitly has the elements of controlling the price. To some extent, the juristic options on prohibiting and allowing regulatory pricing can be used as precedents to justify introducing the new benchmark. As the classic jurist opinions, there are two major avenues regarding the price.
Oops, you're losing your voice again? Atau memang di mute? Hello? Gak ada suaranya? Tadi Nadine ya yang sudah bicara? Mute sekarang ya.
Maybe we can continue to the next slide.
Yeah.
The first opinion is based on Quran Surah An-Nisa, verse 16, that shows the evidence for the opponents of price fixings. that it is not permissible for the government to fix the price of products and service, whether to be lower or higher than the market. It is because the possible element of tyranny or zulm involved. The leader has the responsibility to look after the public interest of all Muslims. Next. And the second opinion is based on the hadith, which tells in determining the price, it is allowed to preserve the basis of justice between people and to avoid the element of injustice or zulm to the public interest or maslahah ammah. According to the group of jurists, the government is allowed to fix the market price when there's a price increase above the normal price in the market. It is not permissible for those who are tyrant or zulm, but it is permissible for those who are just or adil. Next. There are some justification for introducing the new benchmark pricing model for Islamic banks. The first is regulatory pricing and its validity from maqasid of Sharia perspectives. The notion of market price, kias with parameters payment of zakat based on akars or evaluation, having a benchmark based on the principle of Sad al-Dariyah, and revocability of a contract because of guben or loss because of deception or ignorance of price. Next. There are some Sharia parameters for an Islamic pricing benchmark. The first one is benchmark is not meant to fix a price, but rather an indicator and guide to pricing. The next one is, unlike borrowing and lending in conventional practice, Islamic banking activities are more comprehensive, including being a trader, partner, and wakil. It should not be based solely on financial intermediary functions. The next one, the pricing benchmark must be disclosed and displayed to all contracting parties. The factors to be taken into consideration for the pricing benchmark can be taken into account, but not necessarily to be disclosed and displayed. And for the financing activities, the benchmark may vary according to the real sectors and products concerned. Next. And there are also some others. Inflation index can be used as an indicator to trace price movements, and the development and trend of the economic conditions need to be taken into consideration in determining and predicting the benchmark that can forecast the future situation of the markets and discover the patterns of change that market may undergo. The next one is the profit margin for the pricing benchmark should be free from elements of gaban fahish or heavy deception, corruption and fraud. The next is the pricing benchmark should be free from the activities of hoarding, speculation of price hiking, and monopolization of consumer products. The last one, the indices must be accurate, objective, and transparent. Next.
Hello, is my voice clear?
Yes, it is
Hello?
clear. Yes.
Okay, I will discuss the presentation by telling what the journal say in the section 3. So in section 3, the journal discuss about the literature review on pricing of bank financial loan. So the first that it discuss the current financial system that has evolved. So over the 1950s until the 1970s, there are 5 concepts of finance theory that there are early early gearing models or leverage, the model of Modigliani and Miller, and then there's CAPM, then there's APT. We are quite familiar with CAPM, because it's commonly used. It is a relationship between cost of equity, capital, and the degree of systematic risk. Assuming that investment portfolios were diversified and unsystematic risks had been eliminated. Then there's another model that developed by. Then there's another model developed as weight average cost of capital or marginal weight cost of capital that discussed in this section. Then but it doesn't mention it furtherly. So they discuss more about FRM and NIMs, NIMs and FRMs. So FRMs is a model that developed by Western financiers, which alternative to the standard fixed rate mortgage. Then there's a NIM. NIM in European countries and the US found that the regulatory companies in the form of interest rate restriction on deposit. Okay, and then it discussed about the financial I'm sorry. Then they discuss about the financial institution key drivers. First, there is a cost of funds. Cost of funds is the money used out for loan by financial institution comes from the saving and deposit of their customer who will expect something in return for making their money available. The loan rate charge will be influenced by the interest paid on savings. High interest rate on depositor implies a higher interest rate charge on the loan. So it's the opposite. Then there's default. Default, as we know, there will be a chance that borrower not paid the loan. The financial institution must somehow recover the cost of the losses, and then there's an administrative cost. That associate with making the loan and maintaining it. Then there's a capital requirement. In this section, the capital requirement is a certain earning is the pricing source of capital if the financial institution want to do some expansion, growing their business, and etc. Then there is a pricing loans. There's a cost-based pricing loans. Cost-based pricing loans is a method of determining loan price. The lender determines cost to provide loans to borrowers, and then the prices the loans to cover this cost. And there's a competition-based cost pricing. So banks have to consider and research to know what their major competitors in the industry that their charge for loans and then price for loans, and then there's a value-based cost pricing. The financial institution also have to research on the consumer perceived value of the loans and then charge its own loan accordingly. Then there's a pricing based on product and service relationship. This pricing method sees the financial service as a relationship rather than business transaction. Okay. Then there is a then there's a pricing technique. Then the pricing technique is first there is tiering, fractional, and skimming. Tiering, known as a price discrimination, is the practice of charging different price for different size of loan. So the higher the loan will be the smaller interest rate. So it will be very beneficial for for the borrower who need to borrow large amount of money. And then there's a fractional pricing. This is the practice of using non-whole numbers for pricing. The aim is to create an impression of getting lower charge in the borrower. Then there's a skimming. Skimming is in market segment that is really in, it's kind of, I don't know what it's meant. It said that in this journal is kind of insensitive to price. Okay, then there's a market interest. Then the market interest rate that use as follow. There is a overnight policy rate. Overnight policy rate is an overnight interest rate set by a bank in Malaysia used for monetary policy direction. And then there's a London interbank overtrade that is already hello. Then there's already mentioned before in previous presentation. The London interbank over rate is a day by day quotation rate centered on the interest rate at which bank lend unsecured loans from other banks in London. And then there's a Kuala Lumpur interbank overtrade is an interest rate charge on short-term funds. Then there's a cost of funds that is already mentioned. Then there's a best lending or financing rate is also in Malaysia and some other countries refer to prime rate as best lending rate. Okay, so there's a suggested models for establishing in an Islamic benchmark. First, there is a rate of profit mechanism model. This was proposed by an expert. He said that this can be achieved by analyzing the rate of profits in the money market. It is more rational way and promoting to the justice for all and fit the economical nature. But this model has been criticized as by there will be a problem to define a concept of profit and its scope. So, second, then there is a rate of dividend of Islamic banks deposit and investment accounts model. It can be created from the dividends distributed by Islamic banks to the depositors. It will remove the uncertainty and doubt by replacing the interest rate with a rate of profit by providing mathematical index as compared to conventional counterparts said in this journal. But this proposal can also be it said in this journal that this proposal can be challenged by the fact that it is to changing the name of the interest rate to the profit rate, but the essential elements have not changed at all. So replacing the interest rate with the profit rate will change nothing. Then the third is the creation of inter-Islamic bank market based on Islamic principles. This is suggested. This is also suggested by an expert. It said that according to him, the purpose can be achieved by creating a common pool which invests in asset-backed instruments like musyarakah, ijaro, and etc. If the majority of asset pool is in tangible form, like lease property, its unit can be sold and purchased on the basis of their net asset value determined on a periodical basis. Then there is a Tobinsky theory. According to this theory, the supply price of capital can be defined as the rate of return that the community of wealth owner require in order to absorb the existing capital stock. Then there's a last one, a benchmark that fits both Islamic and conventional banks. So Sharia principles which suits both Islamic banks as well as in conventional banks. Like in this journal, it's said like OPR. The presentation will be continued by Nabila.
So hello, ma'am and everyone. So let me continue this presentation, and it's about the section 4, and we're going to talk about the Islamic pricing benchmark. As Tiara said before, it's about the proposal. So in section 4, we have to talk about the Islamic pricing benchmark. So the important point of this section is the interest rate that we know is in the present Islamic banking and finance. Interest rate is currently used as the benchmark for Islamic financing. So profit rates change in Islamic finance basically track the market interest rate. This is basically accepted in Islamic finance circles, for interest rate is merely regarded as a benchmark. So in interest rate that we have to know this, we're introducing new benchmark pricing models for Islamic banks. There is an urgent need to create a new benchmark as an alternative to interest-based rate as stated earlier. So we have to know that the fundamental reason for introducing the new benchmark as an alternative to interest-based borrowing and lending benchmark in the prohibition of riba itself. So in the next slide, we're going to talk about here. We're going to talk about the theory of interest rate and how we determine the interest rate in the market. So in this diagram, the diagram below here is show the typical investment opportunity faced by an investor. So in the project needs an initial investment of followed by estimate future cash flow. With this cash flow, the investor can also estimate the internal rate of the return with in the average rate of the return per period. So wherever the IRR is acceptable for the project to be viable. So the finance is also important. Usually in the financial usually in this theory, the finance by a combination of debt like bank borrowing, issue of bond, preferred share, internal equity, and external equity. Each one of these source of capital has its own cost. So the cheapest being debt financing and the most expensive being external equity, and a weighted average of them give them weighted average of cost of the capital. So we can read from this slide, profitability and riskiness can vary from industry to industry and from business to business with industry. The Islamic financing should be able to distinguish the amount of the market risk and unique risk in the investment apart from determine the profitability. So the benchmark that I said before should be based on the market risk, while the plus determined by the amount of received unique risk involved. Next, we're going to talk about in the next slide. So in the next slide, we're going to talk about estimating the Islamic pricing benchmark, and also we're going to talk about capital asset pricing models. Before we go into far to the CAPM, let's talk about the estimating the Islamic pricing benchmark first. So Islamic financing should take both systematic and very specific factors into the considerations. Therefore, we have to propose that the Islamic pricing benchmark that will be used as the bank cost of the capital should be based on the market risk plus the perceived unique risk involved. So based on the reason initially postulated to the CAPM to estimate the pricing benchmark, so to establish a direct link between market risk project or business and the required of returns. So about the capital asset pricing models, we're going to talk it deeply in the next slide, in the methodology slide. So here is the methodology in this paper. This methodology using the capture market risk embed in the investment. We first assume the investment can be grouped into sectors as a classified by Bursa Malaysia is customer products, industrial products, trading or service, plantation, and also finance and property. So actually, I take this example is also from the paper. So here 3 point of the methodology: result of capital asset pricing models, a result of APT models, and the last is firm specific risk in determining the benchmark rate. So before we go into far in the result of CAPM and also the APT model, let me tell you guys about the firm specific risk in determining by benchmark rate. So to estimate the probability of default may be carried out in the following step. There is 6 important steps. First is by collecting data from historical profile. Second, by single and multi-vector modeling using logistic functions. And then identify the most important factors that have good predictability of default. We have to look the model calibration too and establish the distribution of the default score. And last, to estimate the probability of default, we can use a single vector logistic regression to find out the probability of default of a particular customer. So here the explanation of firm and specific risk in determining the benchmark rate. So for the result of CAPM and the result of APT model will be explained by Amira.
Thank you, Nabila. Please next. Okay. So good morning, everyone. My name is Amira, and I will continue the presentation regarding the CAPM model. So actually, in CAPM, or actually in pricing benchmark, we have to should link the asset, and therefore it's anchored to the real economic sector. Based on that reason, we can initially use the CAPM model as a model to Islamic pricing benchmark to estimated pricing benchmark. So we can actually direct link between the market risk of project or business and their required operation. So as you can see in the presentation, there are the conventional CAPM model. There are the ER equal to R plus beta dikali RM minus RF. Now, where we know that the AR is required return and beta it B as the beta and R is the risk free and RM is the market return. So the question is appear that is in the next slide. What is the CAPM model in Islamic finance? So next. So as we know, in the Islamic finance, the R is not exist. But actually, the fact that Islamic banks are generally operating in the dual system, interest rate is bound to be an opportunity cost and directly or indirectly through arbitrage. So actually, the R can be measured by the Islamic Treasury bill or by rates offered by relative safe sukuk life government sukuk al ijarah. Okay, next. So next we can Okay, this Nabila will be presented by Nabila.
Okay, sorry Tiara, can we go back to the okay, so thank you Amira. Before I continue to this stimulant exercise, I'm going to tell you guys about the methodology. It's about the result of APT model. So Amira said before about the CAPM models. APT models have the different result of CAPM. So in this step, all the factor loading are estimated using equation. So actually, they also have a lot of graph, but you guys can see it from the chart paper. The paper that we have. So we can estimate the using equation with historical data. After obtaining the factor loadings, we estimate the expected returns for the different sectors using the equation. However, actually, we use 2 different ways to estimate the expected returns. And the first one is the risk-free rate is used in the estimation, while in the second model, the risk-free rate is excluded for the purpose conventions. So we have a lot of graph in this paper, but something that you have to know the difference between CIPM and APT, that APT model is perform better than CIPV model. You can see it from the paper. So we're going to talk about in the next slide. It's about stimulant exercise. Sorry, as we can stay in. Okay, so actually in the stimulant exercise, we're going to talk about how to get the benchmark by the exercise. So actually, there is a lot of table in this paper, and I wish you guys can open it by your own. So to have a better understanding of the practicable of the equation. So we have to estimate the final pricing rate. We perform a Monte Carlo simulation exercise based on equation with the assumption that the distribution of return is taken from the actual distribution of historical returns across sectors. And we assume that probability of default follows a normal distribution with means of 10% and standard deviation of 20%. So here the descriptive statistic for stimulate final pricing rate from the left data, like the mean, we can find the median, maximum, minimum, and also we can find the standard deviations. So go to the next slide, and it's still about the stimulant exercise. Like I said before, you guys can see there's a lot of tables from this paper. Sorry, Fabrina, can we? Okay, so here is the table 3 until the table 8. So if you guys open the paper that we have, we will know about this stimulant exercise. First is we can see the table 3, like the descriptive statistic for stimulate final pricing rate. So we in here we can see the actual returns and stimulate pricing rates for different sectors that show in the table 4. So we can see in the table 4 and also table 5. The table 5 showed the stimulate results are comparable to the actual result of different sectors that shown in the table 4. So next to the table 6, table 7, that in the table 7, in order have a better insight on the predictable of the APT model. So by calculate in this table, we did another simulation based on our APT model in which we take the vector loadings taken from the table before. So next to the table 8 is about simulate distribution of pricing rates based on the APT model. So in this last table, we have to take a note that the p-value is used to test the null hypothesis that the stimulate pricing rates are equal to the actual returns. So next to the... Okay.
Thank you, Nabila. I think this is the end of the presentation, but we have some point in this journal that the study is to finding the viable Islamic pricing benchmark the purpose is substitute market interest rate that are currently being used. So in the next point, there are Islamic finance pricing benchmark. So actually is must be based on the risk profile on the real economic venture, or must be tied to the economy, like I was said before. And then the next point is there are different sector face different circumstances and different risk profile that will be best benchmark cost of capital for the respective sector. And there are ringgit exchange rate, because we or Klibor, Coffee, or Libor, and then the Islamic finance can be independent from conventional finance and can be truly an alternative to conventional finance. And the last one, the information that we have to know that is the study is still have some limitation. Okay, I think that is enough for our group. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Okay, thank you, Amira, Febrina, Reisha, Nabila, yeah, and Nadine, yeah, tadi ya. Okay, it was a very long paper, but you did the presentation well. You understood the paper well, so thank you for that. Let's now move on to the last group to present. Kelompoknya Iqbal ya.
Ma'am, I will stop share ya, ma'am. Thank you, ma'am.
Yes. Okay, you're welcome. Who's speaking? Jihan, is that you?
Yes, me, ma'am.
Okay, yes, I can hear.
Alright, Assalamualaikum warahmatullahi wabarakatuh. Good morning, Ma'am Karina and friends. In this occasion, our group would like to present our group work on critical review and summary of looking at an Islamic investment cost of capital from authentic hadith. These are the members of our group. There's myself, Jihan, Suci, Sawa, and Melania. So this journal talks about the Islamic perspective of cost of capital from the Quran, authentic hadith, and various scholars. Many important business decisions involve projects requiring a big amount of capital. And in modern contemporary financial management, the capital structure or capital components with common and preferred stock along with debt are the most frequently used. Cost of capital is the cost of finance needed to acquire the physical capital. It determines the minimum return required by the firm on capital deployed. In the absence of an Islamic rate of return, the interest rate mechanism is used as a benchmark for procurement and placement of funds. In Malaysia, however, the central bank there has basically used an alternative to interest rate mechanism. It introduced the framework of the rate of return to standardize the methodology on the calculation of distributable profits and the derivation of the rates of return to the depositors. So there's two models. First is the interest base of the conventional benchmark and the profit model of the alternative Islamic one. Now let's move to the literature review to see authentic hadith about profit and interest to better understand what's the view of cost of capital from authentic hadith.
All right. Here the author provides many hadiths on trade where it proves that the essence of commerce is sincerity, safety, and utmost kindness and utmost decency shown toward customers. And those who do not comply with this means that they lack the principle, and this can cause damage to the essence of commerce and thus block their own livelihood. It is mentioned that the commerce and profit are generally mentioned in Quranic verses and hadiths. There are no limits to profit or profit rates from an Islamic view. And in fact, Quranic verses have discouraged trading without profit. So those views, especially from conventional one that think the Islamic economy receives little to no profits are wrong. The author also mentioned that from hadith, the Prophet, peace be upon him, has even allowed profit up to 100%. Though, of course, precaution need to be taken against excessively greedy people who might want to exploit people by making excessive profit, as it is also mentioned by the author. This is aimed to protect the essence of open competition and to prevent exploitation of people's needs. But it is also important to remember that the absence of a limit to profit on a percentage basis in a sale contract doesn't mean that one can sell things at any price they like. The price becomes prohibitive when something is sold above the current prices by influencing customers by hiding the goods defect, praising the good by attributing to it facilities which it doesn't really have, showing cost of the production higher than it is, and taking advantage of scarcity of the goods.
Okay, let's talk about prohibited practice. An easy example of this is the price of masks in the early days of the pandemic last year. If you remember, back then a simple box of surgical masks could have the price of 1 million rupiah. In this sense, the extra profit which is not rightful to the seller is haram for them. The author wrap up this section by saying that the reason Islam has not determined a certain limit to the amount of profit to be considered too much is to leave its determination to the customs of countries and regions. Though some contemporary scholars like Sheikh Wahbah al-Zuhaili have suggested that the net profit margin should be fixed by the authority in order to observe justice in the market and to get blessing. They suggested that the profit rate should not exceed 1/3 based on hadith. Okay, next.
Okay, I will continue the material regarding the findings and summary. In order to research for the findings of this paper, the methodology done by the authors is to look into all the authentic hadiths and the views from different mazhab pertaining to profit and interest. The model on the difference between profit and interest can be seen on the table. As you can see, interest yields more negative effects than that of the profit model, whereas the profit boosts creation of value in interest. There is an unjust transfer of value, etc. In implementing a profit model, honesty and commitment on both sides is needed to ensure that there's no injustice received by either party. As for the summary, this journal talks about the Islamic perspective of cost of capital from the Quran, authentic hadith, and various scholars. Here, the author provides many hadiths on trade where it proves that the essence of commerce in sincerity, safety, and utmost kindness and utmost decency shown towards customers. It is mentioned that to commerce and profit are generally mentioned in Quranic verses and hadith. There are no limits to profits or profit rates from an Islamic view. The absence of a limit to profit on a percentage basis in a sales contract does not mean that one can sell things at any price they like. Those who sell something with a price higher than the general price in the market by lying and tricks. The extra profit they make is not lawful. Thus, any profit they require from doing such things is haram. Next. Okay, we've reached the end of the presentation. Thank you for your time and attention. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Okay, thank you for all the presenting groups. So we have 4 groups, each and every one of them have presented. I've basically gone through these topics because I've actually also kind of made an extremely simplified summary of these summaries, and then I delivered them to you during last week's lecture. Therefore, I won't comment anymore because you've also explained thoroughly your findings in the journal, and it's already 10 o'clock. And plus, I need to discuss another matter with you regarding sebentar ini saya buka dulu. Can you still hear my voice? Okay, so I would like to present to you, let's see, your tugas akhir, which will be submitted during the final exam, which will be presented during the last meeting. So here it is. Saya buka dulu. Okay. I will send this file to Kak Alia, and then she can pass it on to you. So I will share the screen. Tugas. There it is. Yeah. Here it is. Can you see it? Bisa lihat share screen saya?
Yes, ma'am.
Okay. Right. Okay. So for the final paper, you basically need to write a paper, yeah, a critical review, yeah, including a case study, yeah, a case study analysis, and then there's a theoretical. First, you make a theoretical framework, and then you make a case study, yeah, and then you analyze the case study, and then you make a conclusion, yeah, and then what this can be done, you can do it either individually or within a group, yeah. However, if you choose to do it within a group, then you need to have separate setiap bagian tuh ada penanggung jawabnya, because the grades will be individual. Ya, jadi nilainya individu, tapi ini bisa dikerjakan boleh secara kelompok atau secara individu. Judulnya, it's not strictly limited to the topics that I will show you. Yeah, there should be no plagiarism. And then you need to cite at least 15 journals or books. Yeah, and then for our class, it will only be week 14 where you will do the presentation. Yeah, and then I will present a feedback, and then you can fix them, and it will be submitted during the final exam. Yeah, and these are the topics that you can choose from. Ya, jadi ada banyak ya peserta di kelas kita ya, ada berapa orang sih mahasiswa di kelas kita, but there are all these, ya. Yeah, there are all these topics. Yeah, and you can. And I really expect nanti saya akan minta pada Kak Aulia juga untuk nentuin supaya jangan semuanya memilih topik yang sama. Jadi kalau bisa, jadi diusahakan, saya minta ya kesepakatan dengan kelas satunya juga agar ini semua topik ini di cover. Jadi ada yang mengcover. Jadi nanti saya juga minta tolong untuk Kak Aulia untuk memastikan gitu. Jadi duluan aja. Jadi nanti kelompok kalian terserah you decide whether you want to do it in a group atau you want to do it individually, and then you submit the topic to Kak Aulia. Ya, kemudian Kak Aulia harus memastikan bahwa ini udah terlalu banyak nih orang yang bahas ini. Jadi berapa orang? Nanti tolong Aulia, ada ya Aulia?
Iya Bu, ada. Nanti.
Ya, saya minta tolong ya nanti dibagi aja. Kan ada berapa topik, terus jumlah mahasiswanya berapa. Kalau memang mereka mau pilih boleh, tapi harus dibatasin. Misalkan masing-masing maksimal 2 orang aja yang ngerjain, sisanya harus pilih yang lain gitu.
Oke.
Dan boleh kelompok, boleh individu. Tetapi penilaian tetap individu. Jadi kalau misalkan dikerjakan secara kelompok, maka harus ada bagian yang jelas. Misalkan ada yang theoretical framework, bagian theoretical framework, ada yang bagian case study, ada yang bagian case study analysis, dan lain sebagainya. Karena nanti nilainya akan berupa nilai individu. Jadi bisa berbeda-beda bagi setiap kelompok gitu. Ya. Itu aja sih dari saya. Jadi ini you have 1 sampai kita ujiannya tanggal berapa ya? Mulai musim ujian?
Mulai ujian itu minggu ujian 17 Juni, Bu.
17
Tapi
Juni
untuk jadwalnya belum
belum keluar ya. Oke, 17 Juni berarti ya kita masih adalah sekitar hampir 3 minggu ya untuk persiapan gitu. Jadi langsung aja dibagi ya Aulia, maksudnya ini berapa orang maksimal untuk setiap topiknya, kemudian teman-teman di-encourage untuk segera mengumpulkan topik, kasih batas waktu, sekarang kan hari Kamis ya, batas waktunya Senin ya, Senin semua sudah mengumpulkan siapa mau bahas apa.
Oke, baik Bu.
Senin itu maksimal gitu, Kalau nanti kita chat kalau misalkan ada yang terlambat ya berarti, sebentar saya memang masih ngajarin. Iya nanti. Sebentar ya. Oke. Saya rasa itu aja dari saya ya. It's almost 10 ya. So next week we'll have another lecturing section. Saya butuh sampai tanggal 17 itu berarti kan kita tinggal 2 pertemuan lagi ya, Aulia? Bener nggak sih?
Kemarin kan Ibu minta Senin depan ya Bu, ditambah untuk.
Kalau nggak perlu kita cukup nggak sih?
Kalau untuk presentasi materi tugas akhir 1 pertemuan aja Bu, atau 2?
1 pertemuan aja. Jadi satunya saya butuh. Jadi kan kita tinggal 2 pertemuan lagi
berarti
kan memang?
Berarti 2 kalau.
Memang tinggal 2 pertemuan lagi. Ini kan sudah pertemuan ke-12 kan?
Iya. Benar.
Iya, tinggal 2 pertemuan lagi berarti cukup dong sampai tanggal 17 saya nggak perlu ada tambahan lagi.
Cukup Bu, 2 minggu.
Cukup.
Kalau untuk sampai 17 Juni.
Oh ya udah, oke kalau gitu berarti nggak perlu Senin depan nggak perlu. Ya sudah. Oke, everyone, then let's call it a day. Sudah cukup ya. Mari kita tutup pertemuan kita hari ini dengan membaca doa kafaratul majelis. Subhanakallahumma wa bihamdika asyhadu an la ilaha illa anta astaghfiruka wa atubu ilaik. Oke, bye bye everyone. Assalamualaikum warahmatullahi wabarakatuh. Terima kasih ya Aulia.